Get ahead of the game with top financial insights. David Cervantes, Alain Corbani, Mulligan, and Sandra Navidi unravel the current market conditions, recession risks, gold prices, and geopolitical threats. Don't miss out on these critical forecasts and strategic opportunities in today's volatile economy. Today on Financial News in Review, we will summarize the following videos. From Blockworks Macro, we have There's Still No Recession, Can Stocks Continue to Grind Higher? David Cervantes. From Kitco News, we have Gold to Go Much Higher and Mining Giants Poised for Growth Through M&A, Alain Corbani. From David Lynn, we have Why is Standard of Living Falling? Trump's former chief economist explains, Mulligan. From David Lynn, we have Trend is Escalation. Top Threats Facing Economy, Democracy, Sandra Navidi. In this insightful episode of Blockworks Macros on the Margin, host Michael Ippolito sits down with David Cervantes, CEO and founder of Pinebrook Capital, to discuss the current economic climate. The focus is on whether stocks can continue to rise given the backdrop of no apparent recession. David Cervantes posits that the market has already experienced what he describes as a soft landing in terms of economic conditions. He argues that inflation has been managed down to the Fed's preferred targets without triggering a major recession or severe breakdown in the labor market. He emphasizes the constant need to be ahead of the data and take calculated risks to capitalize on market movements. Here are the key points discussed by David Cervantes: soft landing and Fed policies. Cervantes believes that the economy has already achieved a soft landing as inflation converges towards the Fed's 2% target without instigating a recession. He maintains that notable indicators like wage growth and the unemployment rate are showing moderate declines, reflecting a slowdown but not a collapse. Tools and data analysis. He uses both year-over-year and short-term data averages to interpret economic trends, pointing out the strengths and weaknesses of each. One critical measurement he uses is the 6-month moving averages to gauge disinflation trends. Fed strategy and market reactions. Cervantes sees the federal funds rate decisions and the Federal Reserve's signaling as critical indicators of future economic performance. He highlights how the Fed's forecasts and policy intentions are more about managing political optics rather than being precise predictions. Economic indicators and employment data. Discusses the importance of the unemployment rate, asserting that significant deviations in unemployment could force the Federal Reserve to cut rates as a reaction. He looks at nominal GDP to understand the broader economic health, rather than getting lost in individual components of economic data. David Cervantes made the following predictions: rate cuts and nominal GDP. Cervantes predicts that the Fed is likely to start cutting rates as early as July or September if the unemployment rate breaches 4.2%, thus triggering the SOM rule. He expects nominal GDP to continue serving as a primary measure for assessing economic health, indicating the direction of market movements. Inflation trends. He anticipates that disinflation will continue to accelerate, pushing down inflation rates and leading the Fed to adopt a dovish stance. David Cervantes concludes by affirming his view that the economy is on a steady, if slow, path to normalization. He underscores the importance of staying ahead of market data and taking calculated risks to leverage upcoming changes. Cervantes advises caution, but also sees current conditions as an opportunity for strategic investment, particularly in U.S. equities and long-end bonds. Welcome to Kitco News, your go-to place for in-depth analysis of precious metals and market trends. Today's episode features Alain Corbani, head of mining and portfolio manager at MLO Finance and overseer of the Global Gold and Precious Fund. Alain brings years of industry insight to a timely discussion on the future of gold prices and mining industry dynamics. The main thesis of this discussion revolves around the recent fluctuations in gold prices and the emerging trend of mergers and acquisitions in the mining sector. Alain Corbani contends that despite recent volatility, gold is poised for significant growth, driven by several overarching factors such as Federal Reserve policy, geopolitical tensions, and shifts in investor behavior. He also emphasizes the potential for mining companies to realize substantial gains through disciplined cost management and strategic acquisitions. Here are the key points discussed by Alain Corbani: Federal Reserve policy and gold prices. Gold has been fluctuating within a tight range due to uncertainty surrounding upcoming Federal Reserve decisions and inflation data. Alain notes that the Federal Reserve's signaling of rate cuts has a historical correlation with rising gold prices, reinforcing his belief in a bullish future for gold. Geopolitical tensions. Geopolitical uncertainties in Eastern Europe, the Middle East, and the South China Sea are adding layers of complexity to the investment landscape. Despite these uncertainties, gold has shown resilience and has continued to attract diverse groups of buyers, including central banks and retail investors, especially from regions like China. Mining sector and mergers and acquisitions, M&A. The mining sector is experiencing a surge in mergers and acquisitions, with a 30% increase noted in the first half of the year. Alain highlights the importance of cost management and operational efficiency, predicting that stabilization in costs will lead to higher margins and valuations for mining companies. Investor sentiment. Despite gold's recent price stability, institutional investors from Western spheres have yet to fully commit to gold investments, potentially paving the way for future demand spikes once rate cuts take effect. Management and operational efficiency in mining. Effective management teams and disciplined operational strategies are crucial for mining companies aiming to take advantage of the upcoming bullish phase. Alain Corbani made the following predictions. Gold price surge. Corbani supports the forecast that gold could reach $3,000 per ounce within the next 12 to 18 months, citing historical trends and anticipated rate cuts by the Federal Reserve. Continued M&A activity. He predicts that the trend of mergers and acquisitions in the mining sector will continue, driven by the need for growth and operational efficiency in the face of tightening capital availability. Alain Corbani concludes with a strong emphasis on the importance of understanding cyclical market behaviors and the external factors influencing gold prices. He advises investors to remain attentive to Federal Reserve policies and to consider the strategic opportunities presented by disciplined, well-managed mining companies. As always, diversification and informed decision-making are key to navigating the gold market's dynamic landscape. Welcome to David Lin's channel, where we dive deep into today's pressing economic issues with top-tier experts. Our guest today is Casey Mulligan, professor of economics at the University of Chicago and former chief economist for President Donald Trump's Council of Economic Advisors. The core thesis of this video revolves around the falling standard of living in the United States, exploring the impact of various economic policies, tariffs, energy regulations, and tax laws, and how they shape market dynamics, consumer behavior, and ultimately, everyday life for Americans. Here are the key points discussed by Casey Mulligan. Tariffs and income taxes. Trump's proposal of replacing income tax revenue with tariffs and the implications of this radical shift. The historical precedent for tariffs reducing import volumes as seen during Ronald Reagan's presidency. The economic ramifications of tariffs impacting everyone, particularly low and middle income families, by raising prices on goods. Energy policy and regulatory costs. The Biden administration's anti-fossil fuel policies leading to lower productivity in energy extraction. The financial impact of regulatory changes under Biden, about $10,000 per household in the first 2 years, with projections climbing up to $60,000 over 8 years. Examples of disruptive regulations include restrictions on the franchise business model and stringent internet regulations. Economic impact of capital gains and payroll taxes. The detrimental effects of Biden's proposed capital gains tax increase to 44.6% on economic productivity and investment. Casey Mulligan's preference for lower income taxes and concerns about potential increases in payroll or other taxes. Casey Mulligan made the following predictions. High regulatory cost burden. If the current trend of regulatory cost increases continues, American households could face an additional financial burden nearing $60,000 over the next 8 years. Innovation decline. Continued stringent regulations and high taxes could lead to a decline in U.S. innovation, particularly in sectors like energy and technology, where the U.S. has historically excelled. Casey Mulligan concludes by emphasizing the need for a balanced approach to regulation and taxation that does not stifle innovation or disproportionately impact lower-income families. He urges policymakers to consider the broader economic implications of their decisions, advocating for a shift back to more market-driven solutions to address issues like energy supply and economic productivity. For those interested in a deeper dive, he recommends his book, You're Hired, which offers an insider's look at economic policymaking during the Trump administration. Welcome to this episode on the David Lynn channel. Today, we're diving deep into some of the most pressing global issues with Sandra Navidi, the CEO of Beyond Global. Sandra brings a wealth of experience as a strategic advisor, former investment banker, general counsel, and best-selling author of books such as Superhub and Future IQ. Her perspectives are invaluable, particularly regarding economic and geopolitical trends. The core thesis of this discussion revolves around the escalating global threats to the economy and democracy, with a specific focus on the U.S.-China economic relations, ongoing trade wars, and the impact of technological dominance, particularly in the semiconductor industry. Sandra argues that these dynamics are reshaping global power structures and economic stability. Here are the key points discussed by Sandra Navidi: economic outlook and Federal Reserve policies. Sandra highlights that while the U.S. has maintained steady economic growth and full employment, the possibility of a recession remains depending on future Federal Reserve policies. She points out the unique position of the U.S. due to its status as the world's reserve currency and its military power, suggesting that any potential recession in the U.S. would likely be shallow and manageable. U.S.-China trade wars. President Biden's administration is expanding sanctions on Russia by targeting Chinese manufacturers, directly impacting U.S.-China trade relations. Sandra discusses the strategic nature of U.S. tariffs and the interconnectedness of the U.S. and Chinese economies, emphasizing the fine balance President Biden must maintain to avoid severe repercussions. Semiconductor dominance and geopolitical implications. The chip war is a significant factor in global dominance, with Taiwan being a crucial player as it produces 56% of all semiconductors and 90% of high-powered chips. Sandra mentions that bipartisan voices in the U.S. are prepared to take extreme measures, including attacking chip facilities in Taiwan, to prevent Chinese control over these resources. Political risks and future elections. Sandra expresses concerns about the political risks associated with the upcoming U.S. elections, where the outcome could drastically shift economic and trade policies depending on whether Biden or a Trump-like figure wins. Deglobalization trends. Sandra explains that while complete decoupling from global supply chains is unlikely, there is a trend towards de-risking by diversifying production away from China to countries like Vietnam and India. Sandra Navidi made the following predictions: continued trade wars and protectionism. Sandra believes that trade wars and protectionist measures will persist regardless of who wins the next U.S. election, with tariffs becoming more strategic under Biden and potentially more extreme under a Trump administration. Slow de-dollarization. She predicts a gradual shift away from the U.S. dollar in global currency reserves, prompted by political actions like the freezing of Russian reserves, although the dollar will remain dominant due to the U.S.' strong economy and political stability. Rise of autocratic governments. Sandra anticipates an increase in autocratic governments globally, driven by issues like uncontrolled migration and inflation, which could further complicate global trade dynamics. In conclusion, Sandra Navidi emphasizes the need for strategic long-term thinking in navigating the geopolitical and economic challenges ahead. She cautions against extreme protectionism and urges for more controlled globalization to ensure global security and economic stability. Stay tuned for more insights and make sure to follow Sandra on her social media platforms to keep up with her latest analyses and publications. In this series of videos, David Cervantes discusses the soft landing achieved by the economy and predicts possible rate cuts if unemployment rises. Alain Corbani is bullish on gold, forecasting prices to surge amid evolving M&A activities in the mining sector. Mulligan warns of the falling U.S. standard of living due to regulatory costs and tax policies, while Sandra Navidi highlights the escalating global threats to the economy and democracy, with a particular focus on U.S.-China relations. Notably, all experts underscore the importance of strategic foresight and diversification to navigate these complex landscapes. Thanks for watching Financial News in Review for June 26, 2024. If you'd like more time-saving content, please remember to like and subscribe. If you have ideas for more channels you'd like to see, drop a comment below. See you next time.